Is it time for a dollar reversal? And what does that mean for commodities and gold and international markets? Here's what you need to know before the bell. At the beginning of 2021, I had a lot of arguments with some of the mainstream media about this coming rally in the dollar. And everybody was convinced back at the end of 2020, going into 2021, that the dollar could only go in one direction, and that was lower. And the argument was quite simple, that with all this liquidity being put into the markets, that was going to create consumer demand, that was going to attract more currency from abroad into the United States, a stronger economy. And that was going to lead to this dollar rally. And of course, we saw a very outsized dollar rally because we injected $5 trillion into the economy. Not surprisingly, over the last year, we've seen the value of the dollar actually decline here. Now, this value decline in the dollar has also been a function of weaker markets, weaker economic environment, etc. But now that we're getting further into this process, it's time to start thinking about the dollar rallying back, right? So one thing is that asset prices can't move in one direction forever. They're going to ebb and flow back and forth. So it doesn't necessarily mean that the dollar is going to rally back to all-time highs, but this dollar is getting pretty oversold here on many functions. Our MACD buy signal, which is now back in place here, is at an extremely low level. So looking for a bit of a dollar reversal here would not be surprising here in the short term. That could happen for quite a few reasons, but one is just positioning itself has become very negative. There's a lot of dollar shorts in the markets, and just like when you have a lot of shorts against equity prices, you tend to get a fairly strong reflexive rally in that stock price when those shorts have to cover. Same thing happens when there's a lot of shorts against the dollar. Look for a fairly strong counter trend rally, probably to about 104 on the dollar index. Would not be surprising. Now, the reason I bring this up is because there's a lot of asset prices that are tied to the dollar on an inverse basis. So much like if interest rates go up, bond prices go down. Well, same thing happens in a lot of commodities. And of course, here we are, we see this very strong rally. This is a chart of gold prices, and we see this very strong rally that coincides with that decline in the dollar. So that decline in the dollar has led to a very strong rally in commodities. And again, gold prices coming down here a little bit as we've seen the beginning of this uptick in the dollar. So if the dollar continues to strengthen, look for a decline in gold prices, probably back to around 1836, 1800-ish on the value of gold. So again, that would give you a much better entry point. But think about, if you're long gold right now, think about taking some profits here. Doesn't mean sell everything, but definitely take some positions here. You've had a tremendous run in gold here over the last couple of months and a very outsized rally. So again, a bit of a correction here wouldn't be surprising. Same thing goes with oil prices, commodity stocks in general. The oil prices as a function of demand have not performed really all that great lately. But when we take a look at energy stocks, those have had a very, very large run because we've seen energy stocks actually outperforming the underlying commodity itself. So with the dollar beginning to strengthen, that's going to lead to a further decline in oil prices. Oil prices should translate into lower profitability for energy stocks and close that gap now between energy stocks, which have been really the asset chase from last year. A lot of people buying energy stocks thinking energy prices can only go in one direction. But if we have a recession, economic slowdown, and a stronger dollar, that's going to lead to lower oil prices. And again, we should see a catch up in energy stocks relative to the underlying commodity price itself. So this also translates over into emerging markets, which have had a really big run since the beginning of this year. A lot of bets on, emerging markets outperforming other asset classes. We've seen this fairly strong rally in emerging markets. Now, again, pay attention here to this because if you take a look at emerging markets and international relative to the S&P index going back for the last 12 years, it's been a terrible underperformer. But there are brief stints where emerging markets tend to perform better. And you'll notice that this rally in emerging markets corresponds almost directly with that decline in the US dollar. So again, if the dollar is about to reverse, theoretically, you're going to get a decline in emerging markets and international stocks. So again, think about taking profits here as well and protecting some of that gain here as we start to move forward into the year. So pay attention to the dollar. Dollar has a lot of impacts across markets and investments and what it means to your portfolio, and that's what you need to know right here before the bell. Is it time for a dollar reversal? And what does that mean for commodities and gold in international markets? Here's what you need to know before the bell. Put you in the chicken coop. Let my daughter take care of you.